What is going on, investors? Hopefully, you guys are doing well out there. It is another Friday here on the Investor Channel where we recap all the major news and the technical chart patterns from all the major FANG stocks. This week, we've got major news, particularly around two companies. One is Google. We should have over the next year potentially a breakup of the search engine giant. We'll talk about the options that the DOJ is likely to set forth for them. We also had a gigantic event last night from Tesla, which saw its shares react violently to the downside today. We'll go over what Tesla announced at their Robotaxi event and give you my thoughts. But we got other companies to get to, including the company we always kick things off like. That was Meta Platforms. So the week at $5.98 as we move into a month where we'll get fiscal earnings towards the end of the month for all of these companies outside of NVIDIA. Meta Platforms slipping down about 1.4% to finish the week. We'll call that at $590 per share. There actually wasn't a ton of news out of Meta this week. Now, moving over to Apple, start of the week at $224 and some change, up about 1.2% to finish the week at $227.55. The company continues to expand its reach around that Apple TV Plus programming. They're joining hands with Amazon, allowing Amazon essentially to resell memberships, a part of an add-on subscription that you can use with Prime Video. So if you subscribe to Prime Video, you could add maybe like Warner Brothers or Discovery or Paramount, and now you're going to be able to add Apple TV Plus as well. Now, Apple executive is departing the company, and I found it was interesting, and look, this executive had been there for a long time, I think over 20 years, so maybe he was ready to retire, but the last product that he worked on was actually that Vision Pro mixed reality headset basically nobody is talking about and nobody is hyping anymore. And so maybe Apple is not going to release a follow-up to that because I think by all accounts that Vision Pro was basically a flop. Now, the iPhone 16, certainly not a flop, but what is being seen in the marketplace is that the base models, these would be maybe the more affordable models underneath the Pro and larger screen models, we're seeing lackluster demand there. And I think part of the reason of that is because for the most part, the cell phone has turned into a monthly installment payment for many consumers. Instead of paying the full price for the phone, companies like Apple, if you use their credit card, also the carriers like Verizon and AT&T, they're basically allowing you to roll up the payment of the phone inside of your service. And so when you only pay a monthly fee for the phone or a monthly payment for the phone, I guess most people are choosing the high-end models. Now, global PC shipments took a big tumble in the Q3, although Lenovo is still gobbling up a fair amount of sales. What was interesting, though, is that Apple sold just 5.1 million Macintosh computers. They were outside the top 5 shipments, and their sales declined 17.5% year over year. The company did announce this week that they might release products more often. That wasn't the iPhone or some of the other popular things, but potentially laptops could see a refresh cycle that is a little bit faster. That could lead to more PC shipments. The other thing is it relates to Apple PCs and laptops is they're actually so good, you actually don't need to replace them probably for several years. Now, what's at stake in that Google and Epic Games fight, which we'll talk about during the Google segment, is that multi-tens of billion-dollar deal that Google pays Apple that basically flows all the way to gross margin, and a lot of it flows down to net income for Apple. Is that deal could potentially be going away for Apple because Google could be forced out of being able to pay to be the default search engines on products like Safari. Now, Apple is getting its most extensive lab in China amid stiff competition. As you recall, we've reported on this numerous times, particularly over the past couple of months. Very stiff domestic competition on the phone side in China. In fact, Apple sales are slipping, and the company has had to cut prices in order to remain competitive against the domestic Chinese cell phone manufacturers. So the company is responding by opening up a development lab, which is actually its largest outside of the United States. And we'll see. I think what would be interesting is that Apple starts to release a phone that is specific to the Chinese market. We'll see if they end up doing that or if they just continue to release one phone and ship it globally. Moving on to Amazon, started the week lower at about 181 and on Prime Day week. We were up about 4% on Amazon to finish the week at 188. The company says its Prime Day deal event was its biggest October shopping event of recent history for Amazon. They always say this every single year. One thing that they did notice is that in the 3 weeks leading up to the Prime Day, a record number of customers worldwide signed up for Prime compared to last year's event. Now, this will fall outside of the fiscal quarter that Amazon is going to report in just a couple of weeks. But what will be interesting is Amazon typically provides some kind of guidance for the upcoming quarter. If this Prime Day deal was as good as the company is announcing in this press release, well, potentially next quarter's revenue probably will be pretty good. Company announcing major expansion of its same-day medication delivery program. These tend to be in larger metropolitan areas. Now, it is a good thing whenever you see Amazon expanding a program because the company likes to do some tests, likes to test a market out, and then if it doesn't end up working out, they tend to squash these types of things. But they must be seeing some kind of demand and service as it relates to same-day medication delivery. And if Amazon can really penetrate that business, well, they probably got a market coming. Now, data center CapEx, that is what we are going to be looking for, particularly when Microsoft, Google, and Amazon report their earnings in just a couple of weeks. We will see how much they spend on a quarterly basis. Has it rapidly, we know it's going to be rapidly expanding over next year, but we'll look at this kind of on a sequential quarter-over-quarter basis as well, and we'll see how rapidly they continue to expand because obviously if they are expanding their spending, well, that's going to flow down to the semiconductor companies, particularly NVIDIA, but you also have Broadcom, AMD, many of the other suppliers as well. So that's something we're going to keep a close eye on. And Citi predicts that at least a 40% increase next year, which would take you into obviously the tens and tens of billions of dollars. Moving over to Netflix, started the week at $6.99. We're on the eve of Netflix earnings. We'll get their report next week. The company finished the week up over 3 1/3% to finish the week at $722.80. Now, analysts are maintaining their ratings on Netflix as we head into those Q3 earnings, and they do anticipate a planned price hike. So that obviously very bullish for Netflix as long as they don't see a lot of churn or cancellation after those price hikes. In terms of what we are expecting Netflix to report next week, you're looking at a number just south of about $10 billion. In fact, I think if you're at $10 billion or higher on the revenue side, that will probably be a particularly bullish report by Netflix. It's really also that Q4 guidance as well. You're looking for a number over $10 billion. Anything meaningfully over $10 billion of revenue guidance, which would take you into the mid-teens in terms of growth, that would be viewed, in my opinion, as very much a positive for Netflix. Now, speaking of positive, we got NVIDIA start of the week at 127 and up, boom, up over 6% or nearly 6%. Finished the week at 134.80. Now, NVIDIA CEO is planning to give a keynote at the Consumer Electronics Show in early January in 2025. I have just confirmed my plans to visit the great state of Nevada and the great city of Las Vegas to attend CES. This is one of the premier conferences that I have ever been to. In fact, it's one of the few conferences that I make sure I don't party too hard in Vegas so I can wake up the next day and go. CES is a must attend if you have the opportunity. I highly recommend it, and I'll certainly try to get in the room when Jensen Huang gives a keynote, although it'll probably be jam-packed in there. Now, Blackwell Ramp, that is the next generation of supercomputer chip that NVIDIA is releasing. It believes, and most people believe, that the ramp and the production appears to be going quite strong. Jensen Huang made some comments that says production is in full swing. He says that the demand is quote-unquote insane for Blackwell. I'll have a newsletter for the Blackwell release coming up over the weekend. If you haven't subscribed to the newsletter, links down in the description below. Would love to see you over there. It is completely free, and we're not going to be spamming your email address like my previous newsletter unfortunately had to. Now, AMD dips after unveiling their new supercomputer chips at a showcase event. They also unleashed some new CPU chips as well. As planned, we've got the MI325X. This compares favorably to NVIDIA's Hopper or the H200, but obviously as Blackwell rolls out, from my research, that is basically leaps above what AMD has out on the market, at least currently. It won't be until you get into the spring, summer, maybe even to next year when AMD actually releases something that is competitive to Blackwell, and by then we probably know NVIDIA is going to be selling a lot of them. Now, what's bullish for the entire semiconductor industry, particularly NVIDIA, is Taiwan Semiconductor's Q3 sales came in massively big time, up nearly 40% year over year, as TSM should report their earnings next week. I can imagine they're going to be pretty good, and so will the guidance. Now, moving over to one of the big companies of the week, Google started the week at 166 and some change, down about 2.2% as the company is finding itself in a battle against the United States government inside of a courtroom. The Department of Justice is mulling actually breaking up Google in a search antitrust case. In fact, Google has already lost this antitrust case, and now we are waiting on a ruling. My understanding is we won't get a ruling or a suggestion from the DOJ and a verdict from the judge until next year. And so this is something that is going to drag way out into next year and likely beyond that, as Google is obviously going to use all the legal remedies that is provided to a multi-trillion-dollar corporate entity. They will be fighting and appealing this as much as they possibly can. Now, the Department of Justice is going to propose measures to a judge for Google to restore online search competition. Some of those options that are believed to be on the table is, number one, potentially Google could open source or provide other search competitors some of the data that they use to build their search engine. So essentially, Google search engine could lose a proprietary advantage because Google would be forced to share some of that information with providers like maybe Microsoft's Bing, but also DuckDuckGo and others. Another remedy that I saw was that the company might be forced to spin off its Chrome browser. Not exactly sure that could be its own standalone entity. Maybe potentially if Google packages up maybe a couple of different things, that could be a standalone kind of spin-off company. We've seen spin-offs in the past, and that could be beneficial to you, the shareholder. The company gets spun out, and you either maybe get cash, you maybe get some cash and shares in the new company, or it gets sold off to some other entity, and you typically, as a shareholder, benefit from that in terms of some kind of cash special dividend. The company might also get forced to sell its Android and Google Play App Store and operating system for mobile devices, and you could also have the ad marketplace get split up, and I actually think that's probably a very high probability, as Google owns the entire auction bidding process end to end, and there's actually very little transparency there. The other measure that could come down, and most people believe this is likely to happen, is that Google is not going to be able to pay tens of billions of dollars to companies like Apple to be the default search engine on Safari's browser, which for Google could be somewhat detrimental to the company, but I actually think that would be more detrimental, at least financially, to Apple. Now, obviously, Google is going to appeal a lot of these verdicts and all of these decisions that are coming down in court. They're going to try to argue these things as best as they possibly can. Oftentimes, though, when you're going up against the United States government, there's only so much you can possibly do. Analysts over at Barclays calculate the impact of nearly $7 billion, which is about 6% of the company's operating income, if the changes just to the Android's ability to collect those, quote, App Store taxes. So we've got some really interesting news for Google. This will be a cloud that hangs over the company for a particularly long period of time, at least for the next 6 to 12 months, as the company decides what they want to do from a court perspective. And obviously the court and the judges decide what they want to do from a punitive standpoint for Google. We'll obviously be here to try to judge and analyze things as best we possibly can. But right now, Google in a little bit of uncertainty. But obviously, I think when you look at Google's valuation, trading at just 21 times forward, you can look at it at a price to sales basis, price to just about any metric. You're not paying a wild premium for a company that obviously has a mountain of cash. And if they are forced to break out some of their products, including Chrome browser, including the Android operating system, let alone something like YouTube or other properties with the company, well, you might get a valuation much, much, much bigger than $2 trillion. We'll certainly see what happens with Google. Now, a company that has faced some of these litigation in the past and really saw its stock basically go nowhere for a decade was Microsoft. Started the week at $4.15 and basically went nowhere this week. Finished the week at $4.16, although the Ballmer eras were marked by, I think, bad leadership rather than just full blame on litigation at Microsoft. Now, OpenAI projections suggest they're going to have no profits until 2029. I think this is actually particularly bullish for a company like Google and certainly other competitors as well. Those losses could mount as high as $14 billion in 2026. This is after the company has reached annual revenue in excess of $100 billion. But they continue to extend partnerships with other media groups. I noticed this when I was searching or I was doing some stuff on ChatGPT this week, and I kind of tested it out. I was looking for a specific quote from Jensen Huang that I know that he made over the past 6 months, and so I searched ChatGPT, and sure enough, it found the quote and actually linked me to an article. So substituting maybe a little bit of what I would have found on a Google search engine, thought it was interesting that OpenAI is including that. Now, the company is mulling, though, setting up some data centers, as there's maybe a little bit of tension between them and Microsoft, as Microsoft is seen not giving enough support from the data center side to OpenAI. By all accounts that I'm seeing, Microsoft is giving just enough server space to OpenAI, but they're also allocating a large portion of that to their own needs and their own clients. Now, they say Azure, though, is the first cloud running NVIDIA's Blackwell GPUs. I bet if you want to rent one of those, you're probably paying a pretty penny. Like we said during the NVIDIA segment, Jensen Huang says the demand for the company's Blackwell line of GPUs, which are an exponential jump in terms of performance over the previous generation. You got to imagine those things, if NVIDIA is going to be able to deliver them, they are going to be selling like hotcakes. Now, a Biden advisor says the administration is working on restarting shuttered nuclear plants. We reported last week that Microsoft struck a deal, I believe, with Constellation Energy, and now you have basically both sides of the aisle, I think, correctly identifying that nuclear power could be a solution to a lot of the power crisis, at least that could potentially come from artificial intelligence. Now, another stock of the week was Tesla. Started the week at $248. It was a big week. In fact, it was a sell the news, sell the rumor, in fact, with Tesla, as shares tumbled today nearly 9% to finish the week at $217. This followed the company's high-profile robo-taxi event, which occurred last night and was streamed, and I did happen to catch it. Unfortunately, it left a lot to be desired, but if you've been watching my program, I've talked about how the fact that the full self-driving software, again, I am coming to you right now as a shareholder of Tesla. In fact, it's a meaningful position inside of one of my portfolios. Now, if Tesla were to go to zero, and the fact that Tesla shares were down 9% today doesn't register on my quote-unquote net worth, whatever that might be, but it is a position of multiple thousands of dollars. I also own 2 Tesla cars, including one that has the full self-driving software that constantly gets updated. Is it great software? Have I used it in dozens and dozens of occasions? Does it get me to point A to point B? Yes, absolutely. Have I used it with my family in the car? Absolutely. Would I put myself in the back seat of the car and let it drive for me? Absolutely not. Would I let my kids sit in the back seat of the car and then watch the car drive away? Absolutely not, times a million. It is not ready. It is not even close, in my opinion. Is it a great piece of software? Yes. Is it close to being fully autonomous driving level? Absolutely not. And what's also not even close is this quote-unquote cyber cab, which many people believe is just a rejiggered prototype of the quote Model 2 that was allegedly supposed to be released or in full production by, I think, early next year. Elon Musk, obviously famous for giving prices and timelines that just never line up. He said that self-driving taxis, a fleet of them, in fact, would hit the streets sometime in 2020. Now, we'll give Elon Musk a little bit of benefit of the doubt as the global pandemic slowed some of this stuff down. You didn't need a fleet of self-driving taxis in 2020 and probably even 2021. However, that timeline shipped for volume production changed to 2024. And here we are with just a few months left in 2024, and we are nowhere left to that. Now, Elon Musk is saying that we're going to start production sometime in 2026 on this quote-unquote Cybercab, which I don't think is a great name for it since it doesn't really look like anything like the Cybertruck, and that they will cost $30,000. I am just looking at this product, and I don't think it fits the need in the marketplace. It's just a two-seater type of car. There's already Ubers will be a competition. People already have a car. That is also going to be competition for something like this. There is mass transportation. There are other types of things. Whereas Tesla's original car, the electric vehicle, that was revolutionary. That was game-changing. A lot of the software and the way the car performs and the way they manufacture it actually is game-changing. This Tesla Robotaxi is not game-changing. In fact, it's one of many designs, many prototypes that are in the work. And in fact, it is late to the market as companies like Waymo are already doing full-scale driving. If you drive around San Francisco, you cannot miss the autonomous Waymos that are already on the street. Tesla saying that they were going to be in market in 2020 and then again in 2024, and now they're saying it 2026. The company is late to the party, and when you're late to the party in an investment standpoint, you're probably not going to capture a lot of the profits. Now, the company also unveiled what it's calling the Tesla Robovan. I don't see much market for this type of thing either. We already have buses, which you couldn't even probably pay me to get on. Maybe potentially in other markets, other countries, other larger cities, something like this could potentially catch on. But out here in California, which could potentially be a major market for this, certainly on the streets of New York, which I was there maybe a month or two ago, something like this just is not going to work. Does it look particularly cool? Does it look like a toaster on wheels? Maybe, but we're talking about a company that has a multi-billion-dollar valuation. In fact, Tesla has a over $700 billion valuation. A concept like this is probably millions, tens of millions of dollars. It just simply is going to be a rounding error on the company's financials. I will constantly contend to you guys, the one product that Tesla is working on that is actually game-changing and that actually has the potential to move the needle on a $700 billion company are these humanoid robots, because when you look in the marketplace, there are already self-driving cars, one that can hold more than two people, in fact. By 2026, there'll be even more in the marketplace. These vans, I don't see anything more than maybe tens of millions of dollars in demand for something like this. When you're looking at the semi-truck as well, it is a niche product. These robots, however, is a revolutionary product. This is like the Tesla original electric car. It was revolutionary. This is very similar to the iPhone as well. Now, we are still in pure prototype phase. These things do work under supervised environment and they do work in concept, but can Tesla be the first to market? Now, the good news is you don't have a lot of multi-billion-dollar, trillion-dollar companies working on these types of things. There's Figure AI and a handful of other companies that are working on these types of things, but Tesla certainly has a top 3 leading position, and it's a company with battery technology, it's a company with manufacturing chops, and it's a company that could also use these things internally to manufacture the cars. This is the product that if you're going to boost the valuation on Tesla, this is the one that has to work out. A $20,000 car, nobody buys $20,000 cars here in the United States. A self-driving car that holds only 2 people is going to be a niche product outside of large cities like maybe San Francisco, Los Angeles, New York City, and maybe a few other places here in the United States. A toaster van is going to be a niche product anywhere across the world and already has a lot of competition there. This is the one product that Tesla is actually working on that is actually game-changing, that if they can actually get it to work, could be tens of billions, maybe even hundreds of billions of dollars in revenue. But Tesla's got to prove that they can take a product like this across the finish line. The fact that they haven't been able to take their robo-taxi across the finish line, despite multiple years of working on it and promising on it, really leaves me to doubt that they are going to take a potentially game-changing, revolutionary product across the finish line. Although with Elon Musk, it's actually very hard to bet against him. Moving over to the technical segment of the show, guys, it is absolutely gorgeous. New higher highs on the S&P 500. we are setting up at the highs moving into earnings season. There is absolutely nothing in these technical chart patterns that say you should do anything other than buy the motherfucking dip. Speaking of buying the dip, is Meta is looking absolutely sensational. Higher high, lower or higher lows confirmed. This thing is looking absolutely beautiful. We'll get earnings with Meta likely on October 30th. Any pullbacks on that day probably will be heavily bought. Apple continues to trend higher. It has not confirmed a new higher high, but when you are not confirming new lower lows, you're creating this flagging formation, which tends to then break to the dominant trend. And the dominant trend with basically all of these stocks outside of probably Tesla is to the upside. For Apple, that could occur on Thursday, October 31st. So after you go trick-or-treating, you might want to check on Apple earnings. Amazon stock is still looking really, really good. We're confirming higher lows. Didn't confirm a new higher high, but you might get a chance as we move into earnings. Those will come likely October 24th for Amazon. Netflix will report their earnings, I believe, next week, Thursday the 17th. So we're about 6 days away from Netflix reporting their earnings. This stock is looking absolutely gorgeous. Just continuing to make higher highs. Pullbacks in Netflix should be bought. Google, despite the DOJ's attempt to break up the company, still looks absolutely sensational. Wouldn't be an area where I'm like loving it from here, but any pullbacks in Google, particularly when they report their earnings on Tuesday, October 22nd, that will be a buying opportunity. Microsoft probably can be bought here or on Monday. You're on the top of what I call a green box buying opportunity, so it wouldn't be an area where I'm really pushing in on Microsoft. And with all of these companies, honestly, you might as well just wait for earnings. You're just a couple of weeks away. There's no reason to really front run those, and you'll get earnings from Microsoft on Tuesday, October 22nd. Now, we talked fundamentally about Tesla, the disaster that it created, and it did create a little bit of a disaster on the stock chart. The thing to understand about Tesla is we've basically been going sideways on the stock, primarily from about 170 up to about 300. It is a relatively wide range, but we're basically just stuck in the middle of that. We did almost break trend that we've been on. We've been making a series of higher lows on this one, confirmed kind of by higher highs. It's not a perfect pattern, and it's kind of an ugly chart, but we did, obviously, after the Robotaxi event, which really created more questions than answers for Tesla, created a large downward momentum. A further break of this as we move lower with Tesla, anything south of 200, you're looking for your buying opportunities back down into the 160s, 170. Tesla delayed their earnings report, as they tend to report the same week as Netflix. They delayed that, I believe, because of the Robotaxi event. You won't hear from them until Wednesday, October 23rd. All of those dates are tentative, and we'll have all of those videos when they report on that day. Folks, that was the Fang Stock Recap Show for Friday, October 11th, 10/11. Hopefully you guys have a safe and fun weekend. I'll do a JP Morgan earnings video this weekend here on the channel. And don't forget, our other channel will have the Semiconductor Show. We'll talk a lot about NVIDIA. Supermicro made some news this week, and we'll discuss the semiconductor business over there. Hopefully you guys have a safe weekend, fun weekend. Thanks for tuning in. Good luck with your investments.